Yesterday, March 4th, 2026, something happened that should have been on the front page of every newspaper on the planet. It wasn't. And the fact that most people missed it is exactly why the people who did catch it are going to have a completely different financial future than the people who did not. Here is what happened. A crypto company, a company that trades Bitcoin, Ethereum, and digital assets, just received something that almost no financial institution on the face of the earth has ever been given: a Federal Reserve master account. Let that land for a second. The Federal Reserve, the single most powerful financial institution in the United States, the entity that controls the dollar, the entity that bailed out banks in 2008, the entity that moved trillions of dollars during COVID, the entity that every commercial bank in America ultimately reports to and depends on. That institution just opened its doors and said, "Come on in," to a crypto company, not to Goldman Sachs, not to JP Morgan, not to a bank that has existed for 100 years, to Kraken. And here's the part that nobody is saying out loud. This is not just a win for Kraken. This is a signal, a very loud, very clear signal about where the financial system is heading and who is going to be positioned on the right side of that shift. Stay with me until the 9-minute mark, because I'm going to show you exactly what a crypto company sitting inside the Federal Reserve System means for Bitcoin, for stablecoins, for your bank, and for the wealth of every person watching this video. And the thing I'm going to reveal at around the 9-minute mark is something that most financial commentators are completely overlooking. If you miss it, you will not understand what is actually happening here. But first, let me explain why this moment is so unusual that even people inside the Federal Reserve were shocked. To understand why Kraken getting a Federal Reserve master account is so extraordinary, you need to understand what a Federal Reserve master account actually is. Think of the U.S. financial system as a massive interconnected machine. At the very center of that machine is the Federal Reserve. Every bank, every credit union, every financial institution in this country ultimately connects back to that center. The tool they use to connect is called a master account. With a master account, a financial institution can plug directly into Fedwire, the Federal Reserve's real-time gross settlement system. Fedwire processes more than $4 trillion in transactions every single day. That is not $4 trillion a year. That is $4 trillion a day. It is the circulatory system of American finance. Every major transfer, every institutional settlement, every large value payment between financial institutions flows through this infrastructure. Now here is the critical question. Who gets access to this system? Until yesterday, the answer was simple. Banks, regulated, federally supervised, federally insured commercial banks, not fintech companies, not payment apps, definitely not crypto exchanges. In fact, crypto companies have tried and failed to get this kind of access before. Custodia Bank, another Wyoming chartered institution that was pursuing a similar model, spent years fighting for a Federal Reserve master account and lost in federal court. The Federal Reserve denied their application and U.S. courts upheld that denial. That was a watershed moment in the wrong direction. So, when Kraken's banking arm, Kraken Financial, was approved by the Federal Reserve Bank of Kansas City on March 4th, 2026, it wasn't just a win for Kraken. It was the reversal of a precedent that the entire crypto industry had been fighting against for years, and it raises a very uncomfortable question for every traditional bank in America. If a crypto company can get inside the Fed's payment infrastructure, what exactly is the competitive moat that banks have been protecting? I'll come back to that. Because the answer is more interesting and more alarming for banks than you might think. But first, let me tell you exactly what Kraken got, because the details matter enormously here. Let me be precise here, because the financial media is doing a terrible job of explaining this clearly. What Kraken Financial received is described by the Federal Reserve Bank of Kansas City as a limited purpose account. Some outlets are calling it a full master account. That framing is slightly misleading, and the difference matters. Here's what Kraken got. Direct access to Fedwire, the interbank payment system. This means Kraken Financial can now move dollars through the same infrastructure that banks use. No middlemen, no partner banks. No third-party correspondent institutions standing between Kraken and the core payment rails of the United States financial system. For institutional clients, hedge funds, asset managers, trading firms, large family offices, this means faster deposits, faster withdrawals, and direct settlement. The kind of speed and reliability that previously required going through a traditional bank is now available directly through a crypto-native firm. It also means Kraken has dramatically reduced its operational vulnerability. For years, one of the biggest existential risks facing crypto exchanges was banking dependency. If your partner bank decides to drop you, which happened repeatedly during Operation Choke Point 2.0 under the previous administration, your entire business can be destabilized overnight. Kraken has now largely eliminated that risk. Here is what Kraken did not get. Interest on reserves. Traditional banks that hold reserves at the Federal Reserve earn interest on those balances. Kraken's limited purpose account does not include that privilege. Access to the discount window. In a crisis, banks can borrow emergency funds directly from the Federal Reserve. Kraken cannot. This is a significant limitation. It means Kraken does not have the same lender of last resort backstop that commercial banks enjoy. Federal deposit insurance. Kraken Financial is not FDIC insured. So this is not a full banking license. It is not complete parity with commercial banks. It is something more precise, direct access to payment infrastructure without the full safety net that banks receive. But here's what I want you to think about carefully. The payment access is the valuable part. Banks don't make most of their money from having a Fed account. They make it from the relationships that account enables. The clients, the settlements, the institutional flows, the trust. Kraken just got the keys to that door. And now I want to tell you something that almost nobody in the financial media has pointed out about what this means for a $312 billion market that is growing at an almost incomprehensible rate. Stay with me. Here's a number I need you to sit with for a moment. $33 trillion. That is the total transaction volume processed by stablecoins in 2025. $33 trillion. For context, Visa, the largest card payment network in the world, processed approximately $16 trillion in fiscal year 2025. Stablecoins processed more than double that. The total stablecoin market cap right now sits at approximately $312 billion. Stablecoins are projected to exceed $1 trillion in total supply before the end of 2026. And stablecoin issuers have become one of the largest holders of U.S. Treasury. Bills in the world holding approximately $155 billion in government debt as of late 2025. This is not fringe finance. This is not a niche market for tech enthusiasts. This is a parallel payment system that has quietly grown to rival, and in some metrics surpass, the traditional payment infrastructure that took Visa and MasterCard decades to build. Now here is the question nobody is asking out loud. What happens when stablecoins connect directly to Fedwire? Because that is exactly what a Federal Reserve master account enables. Kraken Financial can now integrate regulated fiat liquidity directly into digital asset markets. It can settle in dollars in real time on the same rails that every major bank in America uses. The bridge between the crypto world and the traditional banking world just got built. And this is the thing I promised you at the beginning that almost everyone is missing. The conventional narrative says crypto is trying to disrupt the banking system. But what we are actually watching is something more subtle and more powerful. Crypto is not disrupting the banking system from outside. It is integrating into the banking system from the inside. And there is a profound difference between those two things. Disruption from outside means you are fighting the system, hoping it fails, hoping it gets replaced. Integration from inside means you're becoming part of the system, which means when the system grows, you grow with it. Kraken just moved from outside to inside. Does that change how you think about what this company and this industry actually represents? Think about that question. I'll come back to it. I want to tell you how long this actually took, because the timeline is not just interesting, it reveals something important about the future. Kraken Financial is a Wyoming Chartered Special Purpose Depository Institution, or SPDI. Wyoming created this charter specifically to allow crypto-focused companies to operate as state-regulated banks. The state positioned itself as the most crypto-friendly regulatory environment in the country. Kraken began its pursuit of a Federal Reserve master account more than 5 years ago. 5 years of regulatory engagement, 5 years of examinations, legal filings, operational scrutiny, and sustained coordination with both Wyoming state regulators and federal supervisors. 5 years of being told, implicitly and sometimes explicitly, that the door was not open. Meanwhile, Custodia Bank, which was attempting a similar path, fought for its master account application in federal court and lost. The precedent looked bad. The regulatory environment under the previous administration was openly hostile to crypto banking. Then, the political winds shifted. President Trump came back into office with an explicit goal of making the United States the, quote, crypto capital of the world. A new regulatory framework began to take shape. The Genius Act was signed in 2025, creating a federal framework for stablecoin issuers. The SEC shifted its posture. And in December 2025, the Federal Reserve Board itself issued a request for public input on a new type of account, a payment account, specifically designed for institutions focused on payments innovation. Kraken's approval, which came through on March 4, 2026, is the first approval under this new framework for a so-called Tier 3 institution. Tier 3 means an institution that is not subject to federal prudential supervision by a federal banking agency. In other words, a crypto-native firm. Senator Cynthia Lummis, chair of the Senate Banking Subcommittee on Digital Assets, said this is, quote, a watershed moment for the digital asset industry. Wyoming Governor Mark Gordon said Wyoming welcomes it nonetheless. Arjun Sethi, the co-CEO of Payward, Kraken's parent company, described it this way. This milestone marks the convergence of crypto infrastructure and sovereign financial rails. With a Federal Reserve master account, we can operate not as a peripheral participant in the U.S. banking system, but as a directly connected financial institution. Not a peripheral participant. A directly connected financial institution. Sit with that language, because it is the language of someone who just won. Let me ask you a question. If you could get the same payment services as a bank, the same settlement speed, the same access to the core payment rails, the same institutional credibility, but from a company that also gives you access to Bitcoin, Ethereum, tokenized assets, and 24/7 global markets, why would you choose the bank? This is the question that is keeping banking executives awake right now. The Wall Street Journal noted that the prospect of fintechs and crypto firms securing access to Federal Reserve payment rails has, quote, alarmed many traditional banks. Last month, just weeks before Kraken's approval, the Bank Policy Institute and other major banking trade groups filed a warning stating that even limited access to the Fed's payment system could threaten the stability of the U.S. banking system. They were right to be alarmed, but not for the reason they stated. The threat isn't that crypto firms will destabilize the financial system. The threat, from the bank's perspective, is that crypto firms with Fed access don't need the banks anymore. For decades, crypto's dependency on traditional banks was one of the industry's biggest structural weaknesses. When a bank dropped a crypto client, the company's access to the dollar system evaporated. We saw this play out repeatedly. Silvergate Bank collapsed in March 2023. Signature Bank was seized days later. The banking access that crypto companies had spent years building disappeared in a single week. Kraken just insulated itself from that vulnerability. And here is the competitive consequence. If Kraken can offer institutional clients, hedge funds, trading firms, family offices, asset managers, direct settlement in dollars through Fedwire, plus access to digital asset markets, plus a full reserve banking model where 100% of client deposits are held as liquid assets, what exactly does a traditional bank offer that is superior? FDIC insurance, emergency lending access, a longer track record. Those are real advantages, but they are not the advantages that sophisticated institutional clients optimize for. Sophisticated clients optimize for speed, cost, and access. And on those metrics, Kraken just made a significant leap forward. Here is something else to consider. Kraken's parent company, Payward, filed confidentially for a U.S. IPO in November 2025. The company has been on an acquisition spree, adding NinjaTrader, Small Exchange, Backed Finance, and the token management platform Magna in recent months. This Fed Master Account approval is not an isolated event. It is part of a deliberate multi-year strategy to build infrastructure that sits at the intersection of crypto and traditional finance. Stay with me for just a little longer, because the most important part of this story is not what happened yesterday. It is what is about to happen next. And I promise you, this next part is going to completely reframe how you think about Bitcoin's current price, which I know a lot of you are watching nervously right now. Let me give you the honest picture of where Bitcoin stands right now on March 5th, 2026. Bitcoin is trading at approximately $70,000 to $72,000. That is down roughly 43 to 44% from its all-time high of approximately $126,000, which was reached in October 2025. The Fear and Greed Index is anchored in extreme fear. More than 60% of Polymarket participants believe Bitcoin will fall below $50,000 at some point this year. The macro backdrop is challenging. US-China tariffs, escalating geopolitical tensions. Bitcoin's correlation with the S&P 500 has risen to 0.55. Meaning it is trading like a risk asset, not a safe haven in moments of market stress. Gold, meanwhile, has surged more than 80% over the past year to approximately $5,280. Capital is rotating toward the traditional safe haven, and Bitcoin is feeling the pressure. So the obvious question is, does Kraken's Fed account matter for Bitcoin when the market is already in this much pain? And the answer is, not immediately, and massively long term. Here is why. The single biggest obstacle to institutional money flowing freely into crypto markets has never been conviction. The biggest obstacle has been infrastructure. Institutional investors, pension funds, endowments, sovereign wealth funds, large asset managers are not buying Bitcoin on retail apps. They need settlement infrastructure. They need regulated rails. They need the kind of institutional plumbing that they use for every other asset class. For years, that plumbing was missing. Crypto settled in ways that institutional compliance departments were uncomfortable with. Custody was uncertain, settlement was slow, banking access was fragile. Now consider what the landscape looks like today. Spot Bitcoin ETFs are live and approved. The Genius Act has created regulatory clarity for stablecoins. Kraken, a major exchange, has direct access to the Federal Reserve's payment infrastructure, and the political environment in Washington is the most explicitly pro-crypto it has ever been in American history. Does that mean Bitcoin goes up tomorrow? No, markets are messy. Macro pressure is real. The 43 to 44% drawdown from the October high is genuine pain. But here's the question you should actually be asking. What happens to Bitcoin's long-term liquidity profile when the institutional infrastructure connecting it to the traditional financial system is now directly wired into the Federal Reserve? Because historically, every single time the infrastructure supporting an asset class improved significantly, liquidity followed, capital followed, price followed. Not all at once, not in a straight line, but it followed. Let me step back and describe what we are actually watching, because I think the frame most people are using is too small. We are not watching a crypto company get lucky. We are watching a deliberate, decade-long reconstruction of the financial system from the inside. Here is what that looks like in practice. Major banks, JP Morgan, Goldman Sachs, BlackRock, are building tokenized asset infrastructure. JP Morgan's CEO, Jamie Dimon, has publicly noted the tension between crypto firms getting Fed access and traditional banks having to operate under stricter rules. BlackRock now has a spot Bitcoin ETF with billions in assets. Abu Dhabi's sovereign wealth fund, Mubadala Investment Company, has been adding Bitcoin ETF exposure in February 2026, treating the current dip as an accumulation zone. Ethereum, after the successful rollout of the Prague upgrade in 2026, has seen institutions like BlackRock and JP Morgan using its infrastructure for tokenized deposit pilots. Real-world asset tokenization, government bonds, real estate, private credit, has reached $12.7 billion on-chain as of 2025, with projections of $1 to $4 trillion by 2030. Stablecoins are now processing $33 trillion in annual volume. Tether holds a market cap of approximately $186 billion. USDC has grown 73% year over year. Visa's stablecoin settlement hit $4.5 billion in annualized volume in January 2026. Amazon and Walmart are running stablecoin payment pilots, and now Kraken has a Federal Reserve master account. This isn't a trend. This is a convergence. And the most important question in finance right now is not, will crypto survive? It is, what does finance look like when crypto infrastructure and traditional banking infrastructure are fully merged? Because we are not decades away from that question. We are years away, maybe fewer. I want to leave you with the questions that actually matter, not the ones the financial media is asking, the ones you should be asking yourself. First question. If crypto exchanges can now access the Federal Reserve directly, what is the long-term value proposition of a traditional bank for an institutional or high net worth client? Think about that carefully, because the answer is not obvious, and it is changing. Second question, Kraken is the first crypto company to receive Fed payment access. But Senator Cynthia Lummis said explicitly that she looks forward to the resolution of further pending applications in the coming weeks. Who is next? And what does the competitive landscape look like when 2 or 3 or 5 crypto-native institutions have direct Fed access? Third question. Bitcoin is currently sitting at approximately 50% below its all-time high, in a macro environment of extreme fear, with institutional infrastructure that is stronger than it has ever been in the asset's history. What has historically happened to assets in similar positions? What have people who paid attention to the infrastructure signals, rather than the sentiment signals, made from those moments? Fourth question. This one is the most personal. And I want you to actually pause and think about this one. When the boundary between the crypto financial system and the traditional banking system disappears, and based on everything we have just discussed, that boundary is dissolving faster than almost anyone expected. Where do you want to be positioned? On which side of that convergence? Or inside it? I'm not here to tell you what to do with your money. That is not my job, and you should never make financial decisions based on a YouTube video. What I am here to do is make sure you are asking the right questions. Because in finance, the people who win are rarely the smartest. They are almost always the ones who understood what was happening before the crowd did. Here is the single-sentence summary of everything we just covered. On March 4th, 2026, Kraken Financial became the first digital asset bank in U.S. history to receive a Federal Reserve master account, giving a crypto-native company direct access to the same payment rails that process more than $4 trillion per day. In a move that took more than 5 years of regulatory engagement, reversed a prior precedent, alarmed the traditional banking lobby, and quietly signaled that the line between the crypto financial system and the traditional financial system is no longer a line at all. That is not a small thing. That is the kind of structural shift that looks obvious in hindsight and invisible in the moment. And if you got to the end of this video, you are no longer in the moment. You are ahead of it. Now here's a question I genuinely want to know your answer to. Do you think Kraken's Federal Reserve access changes how you think about crypto as a long-term investment? Or do you think this is being overhyped, and the traditional banking system is more resilient than people are giving it credit for? Put your answer in the comments. No right answer. I read every single one. And if you are seriously thinking about how to position yourself in a financial system that is undergoing this kind of structural change, if you want a framework for thinking about where to allocate, how to think about risk, and how to not be the person who figures this out 5 years too late, subscribe to the Wealth Continuum, where I break down the market moves in detail for the people who want to go deeper. The plumbing is changing. When the plumbing changes, the entire system eventually follows, and now you know which way it's flowing.